this is the fifth deal we've had in the fund. KalVista, we own just over 1.5% of the trust, but importantly, 15% of our portfolio has now been acquired year to date, and the average premium of those acquisitions is 50%.
Hello, you're watching ProAct. I'm joined by Ailsa Craig, Portfolio Manager for the International Biotechnology Trust. Ailsa, very good to speak with you again. This is the fifth acquisition in IBT's portfolio in 2026 alone. What's driving that level of M&A activity, and do you see it continuing?
Yes, hi Stephen, thanks for having me back. We've got a bit of a sweet spot situation where the larger cap pharma companies are very cash rich, but they have a problem. And the problem is that they're facing massive drug price IP expiries in the coming years. So in the next 2-3 years, hundreds of billions of dollars of sales will go off patent, and they need to replace that. Now, the trend in the last sort of 10 years has been that their internal R&D isn't productive. And last year, the biotech sector had 70% of new drugs approved emanating from those companies. So you've got this supply and demand. Pharma need the sales, and they're looking to biotech companies to replace them.
You described KalVista Pharmaceuticals as Biotech 2.0. What does that mean in practice, and how do you identify companies that fit that profile when you're building the portfolio?
Yes, so Biotech 2.0 is the way we're thinking about the emerging next-gen companies that are independent. They've developed drugs completely on their own, and they can launch on their own. They don't need pharma support. So this new wave of companies is currently on the cusp or just at the stage of launching a drug. So that's how we term Biotech 2.0. And you identify them by looking for names that have been through the clinic. So they've proven their drug, their asset, is safe and effective. And all that's in front of them now is getting it to patients.
You say IBT assesses companies through a pharmaceutical development lens. Can you walk us through what that actually looks like when you're evaluating a company like KalVista?
Yes, so like I said, clinically de-risked. They've gone through the various different phases of development. They address an unmet medical need. This is important. You want to have a differentiated asset, and you want to see demand for those drugs. Now with KalVista, they have an oral tablet version of a drug called Ectily, which was launched last year. And actually the share price then was $5 a share, and it went for $27 a share, the acquisition. And it's replacing injections. So when these patients feel an attack coming on, all they need to do now is take a tablet, whereas before they'd have to leave the room and take an injection. And that's why the launch has been so successful. And I think that's probably why it's been picked up.
A 36% premium for KalVista shareholders is a strong outcome. How significant is this transaction for IBT's NAV? And what does it tell us about the broader opportunity set you're seeing right now, Ailsa?
Yes, so like you mentioned at the beginning, this is the fifth deal we've had in the fund. KalVista, we own just over 1.5% of the trust, but importantly, 15% of our portfolio has now been acquired year to date, and the average premium of those acquisitions is 50%. Now, last year, we had 15% of the NAV acquired in the whole year, and that was 9 deals. And the average premium was 66%. So this is happening. The run rate looks strong. We did a call at the beginning of the year saying the bankers are very optimistic about 2026. They're even busier than last year, and that seems to be playing out.
Ailsa, how ready are you to redeploy cash when you exit an investment?
For us, we pretty much walk away on every deal when it's announced. We've got plenty of other opportunities to invest in. We use the cash and reinvest.
Well, Ailsa, I hope you'll continue to keep us updated with your progress. Thank you so much for your time today.
Thank you for having me.
Ailsa Craig, Portfolio Manager for International Biotechnology Trust.